Kunal, coming to you first, this market's so volatile. A couple days ago, we were really deeply in the red, and we had 2 days of cheer, and everyone's optimism kind of came back. Today, again, we're sliding back. So, is this something that's going to keep continuing in the markets, which is going to make picking stocks now all the more a selective process? And, while you can share your thoughts on this, please also let us have your high risk and low risk idea for today.
Absolutely. So I think Varun, you hit the nail on the head, indicating that trading is difficult in this kind of a market scenario. For the last 4 5 months, and I'm talking of the months. I think from the month of May, June, July, August. I think the markets were sailing through some extreme degree of uptrend. There was hardly any phase of consistent volatility. Yes, we had seen signs of correction, but we've not seen such kind of a consistent volatility. Now, start of September itself, there was a clear indication of the markets getting into a slightly choppy mode, and that I say is because of the tilt towards defensives. You had the ITs, the pharmas, and select FMCG stocks managing to show signs of strength. Now, yes, in the last 2 days we've seen a ferocious bounce, but then when you look at in the entirety of what happened from the start of September, from 11,800, the Nifty fell to 10,800. So it's almost a 1,000 point fall. Now, in a normal circumstance as well, 1,000 point, any kind of a trend, it generally gets retraced. Now, the first degree of retracement which we look out for in terms of technicals is a 50% retracement. So if you look at a 1,000 point fall, you retrace it by 50%, that's 500 points. That comes to almost 11,300. So now we are heading towards the first test of a major resistance, which is 11,300. So far, the index seems to be failing to break above this 11,300 mark. So even though we had a good opening on the Nifty, 60 points, 70 points uptick on the Nifty in the first 15, 20 minutes, but it's difficult to sustain. However, I believe that there could be probably a second dash towards 11,300, which could probably re-emphasize that whether this is an important resistance and the markets are now unable to break this resistance, or whether the markets are easy to scale past about this resistance and start a new trend. So I believe that traders should probably try and wait till the end of the day for a second retest of this 11,300. That could determine that whether this is a strong trend in the making or this was just a pullback rally. Now, I would continue to focus on very, very strong stock specific action, and which is why I would suggest to buy calls. But my focus is not on the large caps, my focus is more on the mid caps because I believe that the indices still have to show signs of confirmation. So, two buy calls, one on the Bata India. I would place this more of as a moderate risk idea, not as a low risk and neither as a high risk idea. The stock, giving signs of a breakout on the indicator patterns. I think there's an Ichimoku pattern breakout, which is a technical indicator breakout on the daily time frame for Bata India, which generally results into a positional rally for stock prices. So I'm expecting the same for Bata India, suggesting a buy with 1500 as a target and stoppers to be kept at 1330. The second would be a buy on Chola Finance. Now this is an interesting chart because I think 2 3 days back the stock had given a golden crossover breakout. It's a crossover which indicates 50 DMA crossing about the 200 moving average. So we would suggest this as a buy on Chola Finance. I would place this more as a high risk play. Targets to be kept at 260 and stop loss at 238.
All right, thanks for that, Kunal. Hi, Vikas. Morning. What's on your radar as far as high risk and low risk ideas are concerned?
Good morning, Varun. As far as my ideas are concerned, they are normally long-term ideas, and I think one should be betting on fundamentally sound quality mid-caps at these levels. And if you stay put with them for the say next 9 to 12 months, I think there's a lot of money to be made. The first stock which I would like to recommend to investors today would be Indian Energy Exchange. It's a great company, which is India's first and the largest electricity trading platform. It has close to 95% market share. It's like more or less a monopolistic business in India, and it has got pretty solid fundamentals. If you look at its operating profit margin, they are close to around 89%. The return on equity is around 45%. It's a zero debt company with, and the company has been growing since last 3 years. The PAT has been growing at a CAGR of close to 20%. And you've got pretty marquee investors invested into the stock, the likes of Fidelity, Mirae Asset Management, Nippon AMC, SBI Life, ICICI Pru Life, and even MIT, Massachusetts Institute of Technology, owns around 2% in the company. Then they have an investor in the name of Dalmia Cement, the Dalmia Bharat Group, which owns 10%, but recently that increased their stake by around 2.3, 2.4% at levels of close to around 207 rupees, and that was about 7 to 10 days back. So I'm pretty bullish on the stock. I see tremendous opportunities for this company going ahead, and I think NSE's IPO also would be a trigger for all these listed exchanges. So I would recommend a buy on the stock at the current levels of close to 200, and my targets in a year's time would be 300 rupees. The second stock which I would like to recommend would be a cement stock. The name of the company is Heidelberg Cement. It's an MNC company. Parentage is German parent. The company trades at pretty reasonable valuations. If you look at the P multiples, it trades at close to 15, which is pretty low when you compare it with its peers. The company has pretty solid fundamentals, ROE of around 19%. Its debt equity levels would be around 0.33, and the company has a pretty solid EBITDA margins. And the company has also been undertaking cost-cutting measures, which would lead to an improvement in margins further. So I'm, as it is bullish on the cement sector, and from the cement space, I think Heidelberg could be one mid-cap company which one should look at. So I would recommend at the current levels of 180, and my targets in a year's time would be 250 rupees on the stock.